All right, welcome in everybody. I'm coming in remote today. Of course, today we're going to be breaking down a little bit of how the market is holding up against this new tax bill, how tariffs will play into it. You don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor, and that, of course, is Tangem. If you guys are not part of a self-custody strategy, make sure and jump over to tangem.com. And it has a card that's very easy to get going. The app can be on an Android or an iPhone device, doesn't matter. All you have to do is use our link to get started. And believe me, it is very easy to get going. So check it out. You guys will love it. All right, a couple of things I want to get into today. Of course, a lot of news coming out. One of the big things that has been coming out is just this battle that has been coming out of DC, which we knew eventually would happen. And that, of course, is all centered around Elon Musk and this new tax bill. The new tax bill, he's not in favor of it at all. As you can see right here, he's going out with his typical fun and games, and that is kill the bill. And he is going hard on the idea of getting away from this bill, mainly because of the amount of increase to the deficit that it continues to pour on. And his premise is that America will soon be bankrupt. Now, if that is the case, if we continue to see this government spending at the levels that we're seeing and this money printer, well, you guys know what happens on the other end of that. And that, of course, means that Bitcoin and digital assets are going to be on the rise. All right, I want to go to a clip here. This is coming in from TYT. It goes into some a little bit more of the nuances around why Elon is acting the way he is. Take a look.
There's a part of his problem with the bill that he's not really being upfront about. They reportedly included Musk's inability to continue serving in his position as a special government employee beyond the imposed time limit.
Oh, so he did catch feelings about not being able to lead Doge. Okay, wow.
So there's more. He wanted to stay there, but I guess Trump didn't make that happen. The Trump administration's refusal to run air traffic control systems from Musk's satellite internet company Starlink. Trump's decision to withdraw his nomination of Musk's ally Jared Isaacman to serve as NASA administrator, and tax credits for electric vehicles being cut from the bill, a blow to Musk's company Tesla, which has already suffered as a result of the billionaire's participation in the Trump administration.
And why does he care so much about the NASA administrator? Because he has SpaceX and Starlink. So if he puts his boy into NASA, he'll be getting a lot more contracts from the government, like worth billions upon billions, maybe hundreds of billions of dollars. And so then that'll be a good return on his investment of about 300 million that he put into Trump.
Well, I think there's a couple of things that are going on here. We don't know exactly what those values of those contracts are. Eventually that will come out, hopefully. But I do think that the issue of Trump exiting Elon in this short time frame, especially with the fact that Doge has not been successful, this does showcase a little bit of trouble. Now, the interesting point, too, is Elon's been very vocal since he's left the Doge team. And because of that vocal attitude that I think he has right now, I'm surprised that we haven't seen President Trump actually, kind of quash this. But again, this is all speculation as to how this is going to play out. And I think the key here, of course, is what does this do for digital assets? What does this do for general market? One thing to kind of take a look at, this is an interesting point. This is an interesting take by Nick Carter. And what he's talking about is first of all, the fact that we will have stable coins through the Genius Act very soon. But the fact that Starlink and its global reach could open up all sorts of parts of the globe to have access to the US dollar. And this is most likely going to come through things like USDC, Tether, et cetera. But the point being is that we are going to see a lot of activity, maybe now, because of the coverage of Starlink. So hopefully Elon can get it straight and get moving back in the right direction going forward. One other thing I want to hit on, I'll just jump to that tab real quick, and that is that Trump is finally getting a meeting with China. That happened today with Xi Jinping. We don't know the results of it just yet, but what it does tell me is that at least both sides are starting to look at some sort of resolution. I think this is the biggest thing that most of the market is looking at right now. Trump's inability to hold on these tariffs, and also the ability to get a little bit more consistency out of what Trump's administration is doing. So all this could be good unless we get some wild card coming out of this meeting that maybe they could not come to an agreement. One thing I do want to jump to is this is a clip that kind of talks about what needs to happen for both sides to win. Because this is something I've said often, is that both sides needs to feel like they've won. Take a look.
The readout from the Chinese side is suggesting that President Xi Jinping had essentially given a lecture to President Trump on the correct course of action for Sino-U.S. relations. He mentioned the Geneva talks, basically reiterated China's position that we've been hearing, that both sides, or rather that the Chinese people have always kept their promises, that the Geneva talks, from the Chinese perspective, that China had seriously implemented this agreement. There are some suggestions in here as to what Xi Jinping actually wants, and that is that the United States should handle the Taiwan issue very sensitively. There was, of course, a bit of an outreach to try to move the conversation a little bit forward by having the two potentially meet at some point in the future. But this readout really doesn't suggest that China has given up very much. And then you guys had brought up the idea of the rare earths, that President Trump had said that he understands now how complicated the rare earths situation is. From the Chinese perspective, they have said that this is very complicated, that there are all these approvals that need to be made, that it's a 45-day process. And so to me, that seems to communicate that President Trump is now agreeing with President Xi and the Chinese perspective that it's okay that these rare earth export curbs are taking so long to get approved for American industry.
I'm a little surprised that Trump is aligning with what China is doing, because he's been very anti-China over the past, with his rhetoric over the past 6 months to a year, really all of his campaign, if you look at it. But this could indicate that there is some negotiation going on. And I think that's the key thing going forward. And because really, if you take a look at it, the cost of what's happening right now, not only with China, but also the rest of the world, many countries, is these tariffs are starting to hit home a little bit. And I want to go to a clip that will get into more of what the real cost is. Take a look.
So let's get started. Before the April 2nd tariffs, a cotton men's sweater made in China cost $6.80 to produce. A 41.5% total tariff was already in place for that sweater before April 2nd, shipped to the United States. That equals $2.82 tariff on that sweater. At a typical initial markup rate, to get to a 65% gross margin, the retail price before April 2nd would have been about $30. Now, let's look at what happens if the full tariffs announced April 2nd would be enforced for China. At that 41.5% pre-April 2nd existing tariff for the sweater, plus an additional 145%, the new tariff effective rate is 186.5% for this cotton men's sweater made in China, or a total tariff cost of $12.68, making the new cost the retailer pays for the sweater $20.43. The new price the consumer pays would be $57.97. That is a more than 93% increase, almost double. Hopefully you can figure it out with your vendor base. Maybe they take some, maybe you take some, maybe you change the product itself, but maybe you have to cut jobs.
All right, first of all, I'm surprised that retailers are doubling the cost of their goods for retail sale. Now I get it to a certain, I didn't realize retail had that much markup in it. So interesting, but this will affect. Let me know in the comments down below. Are you guys feeling the pressure of tariffs yet? Is it in your everyday life? Hit the comments down below, because I think this is something that we really need to kind of chat into. Now, one thing to consider when you look at tariffs is, how does the dollar respond? And one of the things I want to jump to is this tweet right here, because it gets into a little bit more detail from Kobayashi. And they're talking about institutional investors that are increasingly bearish on the dollar, and that asset managers now are in net short positions on the US dollar. And this is up 47 billion. So it's near as high as since 2023, December. And if you look at the short exposure right now, which has doubled over the last 2 months, what this simply means is that we are getting positions right now where the dollar is not necessarily the best asset to hold. And this is something we talk about often, is that risk assets are the potential bellwether for the future. Now, the real question is there a point in time in which risk assets maybe are not the assets to hold? I don't know that we will see that big of a change, especially as we start to move in. Because remember, Bitcoin has not hit its all-time high. ETH has barely moved. Many of the altcoins are being suppressed right now. We have a lot left in the market. I want to go to a all-time guest or a many-time guest here on our show that talks about this, and this is Darius Dale. Take a listen to his take.
One, the U.S. already has more public sector debt than it can capitalize with its own internally generated capital. And, I'm not calling for an imminent crisis collapse or anything, but again, I think this is all part and parcel to what our long-term conclusion has been on the next slide, which is the risk asset is the treasury bond market. It's not stocks, it's not gold, it's not Bitcoin. And that's exactly what the market's telling you today from a year-to-date performance perspective. There is a geopolitically driven supply-demand imbalance in the treasury market. We have less demand and more supply, and neither political party here in the United States of America has any real political will to fix it. The best way to be exposed to financial market risk, certainly throughout the duration of a forward-turning poly crisis, is via risk assets, because there are very limited levers that the sovereign can pull to get itself out of this mess. There's grow your way out of the mess, there's print your way out of the mess, or there's cut your way out of the mess from a fiscal austerity perspective. We just saw their willingness to do number 3 is very low. So guess what? They're going to try number 2, grow their way out of the mess. When that fails, guess what they're going to do?
Yeah, so there you have it, guys. This is the only answer, and we are in the early stages of this cycle to actually resolve in the way that Darius has been talking about. To hear him say that, though, is a bit surprising because Darius has been a very big conservative and very pro-bonds for quite some time. And I think the point, and this is the point we make all the time, is that at some situation in the very near future, depending on how this bill goes through, the tax bill, and how we end up adding to the U.S. deficit, this is really going to be the next move going forward in terms of how the Fed is going to respond. And if you look at what the Fed is doing and how this plays out, I think the one scenario that we have to really consider is whether or not Trump is going to cut, or I'm sorry, Chair Powell is going to cut, and Trump is going to continue to put pressure on him. This is, of course, a story that Trump is, of course, slamming Chair Powell again. And the reason he's doing this, it continues down the same issue. And I think it is the point that Trump realizes that there is no way out. And the only way to do this is to lower interest because of the fact that we're going to see a continued rise in the deficit. This is good for digital asset, guys. This is good for Bitcoin. It's good for Ethereum. It's good for a lot of these emerging assets that are starting to move in the market. And that in itself will start to trigger a lot more going forward. So be aware, guys, we have a lot happening right now. Just to give you an example, though, this tweet right here, 66% of U.S. consumers now expect an increase in unemployment over the next 12 months. So this is the highest share since 2008. This is the thing that concerns me when we look at the Fed being stubborn and also the fact that we potentially could see a rise in unemployment. These are not good signals for how America is going to become back, much stronger. Interesting times ahead for sure. Now, think about this, and that is look at the rest of the world, what the EU is doing, look at what China is doing, look at what even Japan has been doing. And I will go to a clip real quick because this will get into how the EU is addressing this situation. Take a look.
The Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. While the uncertainty surrounding trade policies is expected to weigh on business investment and exports, especially in the short term, rising government investment in defense and infrastructure will increasingly support growth over the medium term. A further escalation of trade tensions over the coming months would result in growth and inflation being below the baseline projections.
All right, 2 things there that concern me. The fact that they are starting to lower rates, they are getting into the printing zone, And they're also considering a model in which growth would stimulate how that economy might grow. Now, there's only a couple of ways that growth will happen. Part of it may end up in military spending, which concerns me because that means they need a war. And that is a concern for more geopolitical issues when you think about the rest of the world. With that, and the consideration of other key things that are happening right now, it appears that there are several strategies that are starting to deploy. And you know, we've been talking about this for quite a while, is that obviously the ETF strategy of institutional capital coming into ETFs, that's one. This move right here, let me show you something real quick, because this right here surprised even me. And that is the situation of JP Morgan jumping into accepting Bitcoin as loan collateral. Now, we kind of knew that there would be more of this coming. I think the point that they're getting at right here, the bank officially or will initially offer financing against crypto ETFs, and that will again begin with iShares Bitcoin Trust, and then they're going to move to the traditional asset. This is huge because this is one of the things I think holds back traditional investors from going specifically into Bitcoin. And eventually, when you go into Bitcoin as a collateral class, guess what's next? Yes, Ethereum will be next, then possibly some of the blue chips. One other thing that I want to hit on before I let you guys go, and I've got another clip for you that I want you to take a look at. But obviously, this Circle IPO is going to be pretty significant. I think the one thing you got to watch, I don't know that I would necessarily invest in Circle right now, but it is one that we are seeing that, remember, when Coinbase went out in 2021, everybody kind of looked at that was, okay, this is the top. And if you think about it, what's happening right now and the move, I'll zoom in right there, the overall crypto market in comparison to 2021, the landscape is in a very different place. I do totally agree with that. And the fact that we've seen an all-time high on Bitcoin, but we haven't even seen altcoins really running it. And we haven't seen Ethereum running. So Coinbase, everything was on the move when they went public. So remember, and let's not forget, Coinbase went ridiculously high, then absolutely cratered overall. Could that happen to Circle? Let me know what you guys think. Drop some comments down below, because I think that's the thing that we're watching right now. One last thing I want to get to, which is kind of interesting, and that is with all of this happening and where the market currently is, these major strides forward of banks accepting cryptocurrency on loans, the EU lowering rates and printing, Powell may be going to be forced into it through the issues of labor and possibly more pressure from the Trump administration. What does that do to markets? Well, Tom Lee thinks we're set up for a melt up. Take a look.
You'd think that with the S&P doing well this week and a great May, investors are bullish. They are not. You know, in our calls and Zooms with portfolio managers, many are still cautious because they see tariff risks ahead and they don't have tariff resolution in hand and they can't get bullish. I think the feedback we get from a lot of folks is they think stocks shouldn't be rising. So I would say, given the amount of cash on the sidelines, the fact that short interest is going up, and we have a quiet week and markets are rallying, I think the risk is now of a substantial leg up rally from here.
All right, a couple points here. Leg up rally, a lot of conservative moves from traditional investors, not necessarily from the digital asset side. We did a poll over on our Telegram, which, by the way, if you guys aren't in our Telegram, use our link down below, because I'm constantly conversing with you guys there. And I love your feedback too, because we have a lot of conversations about where the market is, what's moving, how you would play this scenario. And the poll I had yesterday around this was, are you bearish or bullish with the consideration of what we're seeing in terms of pressure with tariffs, not necessarily certainty around the stablecoin just yet, and the fact that we got this tax bill looming? Bearish. And it was over 70% of the market. And that's a digital asset owner, guys. So if you're watching right now, jump into that group. Let me know what you guys think. Is this bullish or bearish? Obviously, you saw Tom Lee right there thinking that we are in a position for big growth. If you're not in the Diamond Circle, get in right there. That's the place where you can get all of additional content from us that we don't air here on the show. Of course, you can follow me out there on X at Paul Barron. I'll catch you next time right here on Tech Path.